All right, we'll give everybody a couple of moments to get in. We'll let you get started before we go ahead and get started. I will be cutting the chat tonight. We're having to do another class. Class got hijacked with questions that weren't beginner-based questions. So tonight's topics are going to be as followed. I'm about to post them, and so I'm going to take control of everything. We'll give everybody a few minutes to get in. Get this record. AI notes are being taken, so you will get some AI notes as well. I just cut those on. So we'll let everybody get in here over the next couple of minutes, and then we'll get started. All right, we're going to go ahead and get started. We give everybody enough time to get in. So the class is being recorded. This is a pop-up class. So we want to talk about first thing tonight. I want to help some people when it comes to trading options, making sure that they understand your order types. So I actually want to go over that with you guys here for a second. So one of the main things that you want to utilize is understanding the difference between your market orders and your limit orders. So I have on the screen in front of you the main difference of being able to utilize a market order versus a limit order. Market order is going to execute immediately at the current price. So for example, if you're looking to buy 2 AMD calls for the 105 stock options, right, you are going to execute those right at the market price. So that order fills the fastest. Your limit orders are always going to be set at a specified price. So at a specific price, you have to go ahead and choose your limit orders. So for example, if you're going to place a limit order to purchase 3 NVIDIA puts at an example of 420 strike, those put options may be $5.50. So that is going to be equivalent to $550. You cannot put in your system $5. Well, you cannot put $550 without the period, right? So you need to make sure it's stressed as a limit order and $5.50, which is going to be equivalent to $550. So that's very important. A lot of times people are putting in 550, and then when the order is not going through, they're wondering why. So you want to make sure that you are utilizing this because this is going to best help you. Also, as well, you are going to buy in the money options. I'm getting messages from people saying, well, I'm trying to take this trade. If you cannot afford it in the money option, that's not a stock you should be trading. But what if I can't afford it? Can I go? If you're looking at Oracle or I'm telling you to buy a 150 or 160 strike, you need to go in the money. So all calls that are purchased are always going to be in the money that are recommended here. One of the things that I stress is that until you take enough classes of mine, do not trade any options. I want to stress that again. As a new person that's coming in, there's a lot of things that you don't know. So we want to make sure we go over those things as much as possible before you start putting your money out there at risk. A lot of times people just try to jump in. I'm going to get in this, and you don't know what the variables are. So make sure you know that. So we're going to next talk about, right, how to buy an option. You open your trading platform. You select your ticker. In this example, it's AMD. You choose whether you're buying a call or a put option. You choose the quantity, right? So 100 shares per contract. So one contract is equal to 100 shares. You select the option, right? The order type, excuse me, market, limit, or stop. Then you confirm the trade, right? It's really just that simple. Now, once you've actually opened a position, so now you're holding the position. Now you want to go back and you want to close the position. You want to select the option from your front page portfolio, whether you're using Charles Schwab, E-Trade, Robinhood, whatever broker that you're using. You want to go and select that option from your portfolio. Choose your order type, market, limit, or stop. Particularly when you're selling options after you already purchased them and you're closing your position out, you want to go ahead and use a market order, right? That's going to fill you the fastest. Now, if you use a limit order, then it's going to obviously struggle sometimes a little bit to get filled. So you have to make sure you replace the order. Keyword replace. So you must make sure that you replace the order. An example, right, of buying and selling an AMD call option, right? So if you're buying the ticker, you're going to go ahead and choose that specific strike price. You choose the expiration date, and then you also have your order, which is going to be a limit order. So let's say you want to get filled at this specific price, which is $3.50. If I'm buying two contracts, how much am I paying? I'm paying $700. But you're not going to put 7.00 just because you're buying two contracts. It's very important to know. Each contract is treated as one. So don't put 7.00 because you're buying two contracts, or don't put 1050 because you're buying three. You know, that's a mistake that as a new person you could make because you may not know. You're like, okay, I'm going to total it all up and then I'm going to put it. Don't make that mistake. So simply make sure that you are putting in buying, right? Now you're buying this call option, which it also may be specified on your platform, either called BTO or buy to open. That's the same thing. BTO is just the acronym. So anytime you're buying a call or you're buying a put, you should be utilizing BTO, buy to open. Anytime you're selling a contract, so you get here, you've already owned it. And so you've seen that premium increase from $3.50 to $6 even per contract. So that means in this example, you would be up $250. You want to go ahead and sell the order right at a market price. So the total sale would be for two contracts, remember, times $6 a piece, which we know is $600, right? You are now selling that in total value, right? So now you sold it and collected $1,200. But what did you actually gain? What you actually gained, right, was $500. Remember, you paid $350 up front. So you paid $350 per each contract. So you paid $700 in total. You had a difference now of gaining $500 minus any small fees, etc., right, that you may have incurred. So the key takeaways, right, to make sure that you understand, avoid trading the first 10 to 15 minutes to open. So this is what I definitely always stress to people, is making sure that you are going to do this, right, is not jump into positions right at the opening bell. You know, this is what cooks a lot of people sometimes, is getting in right at open and having a bias, right? Oh, the market's down in the pre-market, so I'm just going to jump in shorts. Look at how that fared for people today. Not so well, right? So that's why I also tell you guys to monitor the VIX. So the VIX guide, and I was trying to go over this today. I wasn't able to go over it how I wanted to, so I want to double down on it, right? So the VIX and the volatility index is one of the more important indicators. The VIX is very, very vitally important. Today, the VIX closed at about 21. So anytime that the VIX gets above 20, that is where you see more increased volatility. You see the large market swings. Hence today, the SPY opened and the QQQ opened up down, but they closed the day positive. By the opening bell, we were down about all the way about $6 on the SPY. We ended up rallying right back to the upside. On the QQQ, we were down as well. Right at the opening bell, we were at 599. And then on the SPY, we were right there around 680. So the market pulled a U-turn in the pre-market. We started to come back upward. And what ended up happening was, the main reason is because the VIX didn't break through 25. So anytime that the VIX goes to 25, that is your rejection point. Very easily, it's to see, you can easily buy calls on the QQQ or the SPY when the VIX hits 25 and it doesn't break, and it's going to reverse because the volume is switching over to the put side too much. So puts become inflated. What's a really good spot to sell put options, honestly, is right there when the VIX is above 25 and at 30. Because if you want to sell some put options that expire worthless, it's pretty easy to do so when that happens. The VIX does not tend to break over 30 too often. It usually takes some really, really increased volatility to have that happen. So when the VIX breaks back below 20, that's where the buyers usually really step back in. You start to see the NASDAQ, the Dow Jones, and the S&P start to push back up higher and recover. So this is the main reason why you should sell puts when the VIX is high. Higher VIX means higher option premiums. This is a great time to sell puts because think about it. When the market is coming down, what's happening? The volume is shifting more to the downside on the overall market. So now it makes more sense for you to go ahead and sell put options. The purpose of you selling put options is to, one, you have the cash that you want to leverage, but also two, you're now going to go ahead and sell these puts because you've now identified a company that you say, hey, Netflix, Robinhood, Amazon, right? Just three names in general that are in good ranges where you probably want to pick them up, right? You sold those put options because you believe the price that the stock is at, you want to go ahead and pick up that individual investment at those levels. So selling put options is a great way to get assigned to positions that you want to acquire, right? Also, if you cannot actively monitor the market, it is crucial to stay on the sidelines and avoid unnecessary risk. If you are in long-term positions, proper risk management is key. Stick to your plan. And I want to talk about a couple of things when the VIX does go up and the market ends up pulling back downward. All right. So for anybody that's sitting here that's been in the community longer than a year, it's probably really no reason for you to be here tonight because it's going to be a lot of the things that I've already stated. So I do want to make sure that we give our beginners some time to really really get this information and make sure that I'm not repeating things that maybe you already heard. All right. So when you look at the holdings here, this is your ETF.com. Very simple platform for you to use to really take a look at your overall holdings. Without these names moving upward, the market cannot really go up. That's why, unfortunately, NVIDIA is responsible for the market's stagnation. You see, the market hasn't moved because NVIDIA hasn't moved. NVIDIA is number one in 2 out of the 3 main indices. Apple is right there at number 2. Then you have Microsoft, which hasn't picked up the slack either. They've actually sold off. Amazon as well, Meta as well, Tesla as well. Google has played a nice role, but they can only do but so much being at the spot they're at. Walmart has creeped itself up here because Walmart's performed well. Broadcom has even dropped. Broadcom at one point was number 5. They've slipped, right, because of their performance. Micron has climbed because of their performance, but still Micron is at number 10. So the move that happened on Micron, let's speak in a hypothetical for a second. Let's say Micron and NVIDIA had switched spots and MU did what they did over the past three to 6 months here, you would still see the NASDAQ climbing because MU, well, you just take a look at this thing, right? Since September, 117 all the way up here to even 412 to this date. So the thing that I want to stress to you guys is very, very, very important, right? Is now you have MU, which, like I said, is shot up like a cannon. So because it doesn't sit this high, you take a look at NVIDIA, which is number 1. You got NVIDIA, Apple, Microsoft, Amazon, all not doing anything. So this is why every day it feels like, well, one day down, next day up, one day down, next day up. That's why it feels like that over and over and over again, because your main contributors are not moving upward. So until these names start to move, or some of the other names that are down here on the list start to come upward on the list, that's the only way you're going to see any real movement on the SPY and the QQQ. So the market is honestly topped out at this time. You're not, until you get above, and I want to explain this clearly for my new people tonight. The SPY and the QQQ, notice here in this trend, you're sitting sideways. Now, last time we sat sideways this long, not saying that it's going to repeat itself, but notice once you break this structure, so once you get underneath like 650 on the SPY, people keep asking me, when you think the market's going to pull back? When we break below 650. So all down to 650 is still a buffer. So until this thing really gets below 650, it's going to be range bound unless we get above 700. The only way for us to get above 700, I just explained to you as to how. That's the only way. Those stocks right there move up. That's how you get above 700. Until then, you trade sideways within this range. Now, the last time we traded within a range like this, it was from October of 24 up until February here at 24. So that was the last time we did. To show you a couple previous points that we've had some, some sideways action. Right? Let's go back. Right? In 2018, we traded sideways within the same range for a good period of time. Then once we broke to the downside here in December, very quickly, but then price rallied and came back up. Of course, this was a COVID drop. So I want to take you back in time as well, too. There also is a chance that even something like this could play out from 2014 all the way to 2016. You know what I mean? Think about the SPY. Sat literally within a $30 range for 2 years. Think about that. From 2014 to 2016, you sat in a $30 range. Now, was that necessarily the worst thing? No, because then in 2016, through the latter part of 2016 through 2017, up until 2018, look at how much the SPY went up. So that 2-year consolidation led to, after that consolidation point, at the time, the high we'll say is 210, led us all the way up to about 290. So you think about that, the S&P 500 went up 40% after that 2 years worth of consolidation. So not saying that this is going to last 2 years, or I'm just putting this in a perspective for people so they can see that either one, you're going to break upward, go back to it real quick, until you break over very clearly, till you get a clear move above 700, the SPY isn't going anywhere, or you get a break below 650. That's all we really can look at for right now. That's why everything is range bound. Those individual equities look like they're starting to potentially roll over, but we know the volume is weak inside of these channels and trends. So we're range bound because really people are kind of still sitting back saying, this stock is already valued at this price. It's a bit expensive, right? So they're not much in a rush to take up NVIDIA. NVIDIA now has 24 billion shares outstanding. That's what NVIDIA's float size is 24 billion shares outstanding. So Apple also has a large float size of about 16 billion. So collectively together between both of those two companies, you're talking about 40 billion shares outstanding. Mathematically, Apple and NVIDIA have turned into grandpas. That's just what has happened. They've turned, they old, they 90 years old. That's how old these companies are. Apple and NVIDIA are both 90-year-old companies. We ain't saying they about to just pass here quick. We just saying that they're slow. When they get up from their chair, they need a walker, and they're a little bit slower. So these things are snails. They're not going to move fast. NVIDIA is going to go above 200. Apple is going to break 300, but it won't be fast, and it won't be just a blast move. It's going to take some time. And so both of these names have large float sizes. They're not going to be the big movers that you saw flying off the top rope. That's not going to happen. But what we try to identify is say, during this time, once again, you're still on the flush side. You could trade either sideways. The likeliness of us trading sideways to me is 70 to 80%. We're not probably breaking above 700 anytime soon, nor are we going to be breaking below this 650 unless some sort of major catalyst comes in. Any pullback that you see, we'll go to the monthly time frame. All the pullbacks that you see on this chart in the past 10 years, right, have came from some sort of policy shift, some sort of economic change, right? That's what's caused this to happen. You go back to 2018, it was the tariff situation and a combination of rising interest rates. You go back to 2020, COVID, nothing else to say there. But then you know what happened the 2 years after that. Then in 2022, rising interest rates, but you had a lot of businesses that started to correct very quick and profits be taken. Then by the time 2022 was over with, you had like a 10-month downturn, right? You ended up turning this thing around. 2023, September, pullback, right? But then you rally right there up. November bounced up here to 2024. You know what happened? Liberation Day, not so liberating. And then here we are. So that in a nutshell shows you the past literal almost 10 years of everything that's taken place on this market. It's been really four pullbacks. 2018 pullback, 2020 pullback, 2022 pullback, and 2025 pullback, Liberation Day. Four pullbacks. But yet, if we go back to 2018 and you ask yourself the question, where was the S&P 500? S&P 500 here at 2018 was at, we'll say 280, 290. The SPY today is at 686. Just some perspective to have. If you want to look back since the financial crisis, just to put this into perspective, the SPY is literally up 10x. Just let that sink in. So that means almost the past 20 years, the SPY is up 10x from the low. 10x. Just my thoughts on that. So these are the stocks that obviously are mainly responsible for the success overall of the market. So until those names start to move, right, it's not going to be your trash OKLO, and I'm about to start calling out some tickers who deserve it. It won't be CoreWeave, sorry behind. It won't be Circle Internet's Group, sorry behind either. Shout out to Circle Internet's Group, sorry behind. They were up $12. But notice that didn't affect the market. Trash company. We still want that thing sub 50, right? So they're not responsible, right, for it. Zscaler can't do it. Zscaler is down significantly. It won't be United Health. It won't be Dollar General, right? It won't be ServiceNow, right? It won't be those companies that end up bringing us back up to the upside. But the names that it will be Caterpillar, will be Goldman Sachs, will be JPM for our Dow Jones Industrial Average. You take a look at the S&P 500, it will be Meta, it will be Amazon, it will be Google, right? Those are the names that are needed to actually push us up higher. So without those names pushing, you can forget about the market going up right now. And we're likely to continue to trade sideways. So the only way, once again, all of the move down to 650, that's what it's going to take. So to drop below 650, what I would do if I was new, I would set an alert for 650 on the SPY. Because once you break there, that's where you would start to see a pull down. I'm not saying we go back to 500 and anything like that on the SPY. But what I'm saying is that underneath 650 would open the door for us to pull back to 620 and lower. That's where you will see a correction on the market. Let's talk corrections and bear markets, right? I want to talk correction and bear markets with you guys. So we want to put these numbers down because, you know, one red day is not, and this is why I got to stress this, the trash I was seeing on social media all over this weekend, right? Oil stocks are good to invest in. Oil stocks are trash for trading. You don't trade oil stocks. Defense stocks are trash for trading. They're trash. They don't have volume. So unless you were going to be in those things before the situation happened this weekend, you're just going to become somebody's exit liquidity. And if you're not paying attention to how there's a trend that all of this stuff always happens during the weekend, just like the Venezuela person that got captured, right, and brought back to America. We forget so quick, but it's the same thing. Happens over the weekend. Oh, oil, these are the oil stocks. These are defense stocks you want to know. If you're going to invest in them, you're going long money is in those. If I pull up Lockheed Martin, it ain't no day traders who touching this thing. This is real money. This is real money that's in this thing. So you have to already be in these positions. These are not things that you just get in just because you hopping in. No, you get in these things early because they tend to move right without you when it's happening after hours. Lockheed Martin is up here all the way from 500, for the middle of 400, 450, all the way up to 670. But you look at what happened with Lockheed today. Opened up, profit take. So yes, it gapped up over the weekend, but all the profits were taken off the board. So this is the thing. If you've been paying attention, you say, yo, you go back to January and you say, you know what? I don't believe Trump gonna stop fooling around with this thing. Then you put a position then, not when everybody's talking about it. So your Raytheon, all of that, that's the time you put it in when it's not on everyone's mind, not when it's on the front of page and center. That's not when you do it. Or when you're looking at XOM, right? Same chart, right? Same chart. Didn't change. It's been trending upwards past 60 days. What happened today though? Profits taken off the board. But notice as this trend, we go back to the 7th of January. It kept right. It doesn't go up, right? It doesn't go up just in a straight line all the time. So this is what you're seeing right now from it is really an anomaly. The way this thing trades. Because look at the past 4 years. What was it doing? Consolidating. People wasn't trading this, but you about to see something. It had a big bull flag. So it broke out of that bull flag finally. Look at that. I just added my levels back. So you had a massive bull flag, but mind you, this bull flag is on a monthly time frame. This bull flag took 5 years to develop and break, by the way. So this $30 move, right, took 5 years to really develop. So just keep that in perspective. When I talk about these names, these are good quality names. ExxonMobil, you about to go pump gas right now, right? CVX, you about to go pump gas right now. Lockheed Martin, these are great companies, but they only tend to get volume when what? People feel as if, all right, something could be happening. That's when they tend to trend upward and they trade like tech stocks, right? ZOM, once all this is over, will go back. Not saying they pull all the way back now, but they're going to trade sideways before their next move. Not saying it's 4 years, but I'm just showing you these are things that you want to get into beforehand, right? These are things that you don't want to just jump in just because you see something trending. You'll become somebody's exit liquidity quicker than what you know. So you have XOM, which is doing very well, right? Of course, you had GE Aerospace, which is one of our 2026 picks. We talked about GE at the beginning of the year. It's done decently well, maybe not as well as, definitely not as well as Lockheed Martin and a little bit of XOM, but GE is still breaking out. Obviously, GE Aerospace. You take a look here, good solid day for them. We still expect more room to the upside on GE Aerospace, definitely. So I'm just showing you that realistically, the news plays definitely a major role in how the market is going to move overall. But I do think that is, once again, very important for me to stress to you guys is we sometimes overreact to the downside. And we think, anytime that something bad happens in the market, everyone, oh, this is what's going to finally pull us back. The market's about to crash. Let's talk now levels and numbers. Let me go back to our indices. As a new investor, here's one of the common mistakes that people make, right? You think every red day is truly a correction when corrections don't happen that often and bear markets happen less than that. So you take the high, so you put 637. What's the peak and the high? Take 637 and you go ahead and you times that 637 by 10%. That's going to give you about $64. You take 637 and you go ahead and minus that by $64, you come out with 573. So that means until the QQQ gets to 573, there's not a 10% correction. A correction is defined by a 10% move or more. So I took 10% of the all-time high and I minused it, and that gives me 573. So that tells me that the market is not going to correct on the NASDAQ until we get below 573. Right now, I'll take the S&P 500 and I'll take 698 and I times that as well by 10%. So you take your SPY and I times that by 10%. You should come out with about 69 or 70, excuse me. So that's easy math. You should come out with 628. So 628 is going to be what? That is essentially your correction zone. So getting down below 628 would prompt you to be in a correction territory. What's the order of how the indices correct first? NASDAQ always corrects first, S&P corrects second, Dow corrects third. The distance between the S&P and the Dow is usually by about 2%. So usually the Dow and the S&P 500, a lot of times are in between like 2 to 3% separation of how far away they are from each other on average. Not saying that's always, but on average, they're a distance of 2 to 3% trailing behind. So the Dow will usually be 2 to 3% trailing behind the S&P 500. Usually in totality, the S&P 500 during corrections with the NASDAQ is usually trailing behind it anywhere between 2 to 4%. So that's usually when you look back, it's in between 2 to 4. So you can put that down. What's going to correct first? Your NASDAQ, your tech heavy businesses. Why? Because they're the most volatile. They're the businesses that probably have some cash on hand, but don't have it all on hand. There's some businesses that are probably generating revenue, but don't have all the earnings. So your highly speculative assets always get cooked first. So when the market comes down within a day and the NASDAQ falls 2%, you're going to hear me talk about this in the program. That's how I know when people are too over leveraged. If the NASDAQ falls 2% and your portfolio is down 20 or 25% on the day, that means you're too over leveraged. You're too over leveraged in NASDAQ tech heavy businesses. You're not enough in Caterpillar. You're not enough in JPM. You're not enough in Goldman Sachs. You're not enough in our healthcare names. Your Eli Lilly's and companies, right? You're spread out too far in just these NASDAQ tech heavy names. Now, it's beautiful when the NASDAQ pulls off a run like it has since April. But what happens when things consolidate and turn over? What's a stock that looks exactly like the NASDAQ's chart right now? And this is how I want you guys to get so good that you can just look at patterns and you detect it. I see AVGO and I'm looking, I'm saying, damn, they look the exact same, right? Don't this look the same? Don't this chart look the same? Right? So Broadcom is reporting quarterly earnings. We know Broadcom is in that top 10. We know the NASDAQ needs a little bit of a lift. We know NVIDIA is right here too. So NVIDIA stock, but look at how identical, right? Compare and contrast, right? Take a look right here. So now you're taking a look at the NASDAQ, you're saying, damn, we ain't got no juice. And we literally don't. We don't have no juice left. Not right now. And it's not necessarily saying we're going to immediately drop, but the more and more we trade sideways and we start to roll, these stocks are going to pull down. If we don't break to these upside on these equities, so that means if earnings don't come in strong over these next 2 to 3 quarters, so for the rest of the year, if earnings, and I said this last year, I said 2026 will all be about what you can show me for these companies. It's no more, oh, we're going to be doing this in 2028. Investors don't give a damn right now. You need to show me these earnings need to exceed expectations. So if earnings do not exceed expectations, I'm just giving an example with Broadcom here because they have earnings this week. The market is going to pull downward because these names are going to sell. Your NVIDIA, you saw what they did on earnings, but it still sold, right? Great quarter, beat on all the numbers, right? But it wasn't spectacular. And that's the problem when you have 200 to 300% beats. And now you start, I'm going to use this word loosely, only beating by this small margin. That's the way Wall Street evaluates you and says, damn, well, NVIDIA only beat by this much. And it's like NVIDIA is still a behemoth of a company and they're still firing on all cylinders. But now people are setting in because they have such high expectations. Now, these high expectations don't mean that these companies are bad, but the pullbacks that happen in the market always present great opportunities to buy. I can think about when AMD, I remember when it hit intraday 227, right? And AMD pulled back in that time period. Think about how AMD is at $200 here now. But remember, there was a point in time where AMD hit this 227. Like I said, you need to know these numbers like that. Notice AMD's chart wasn't pulled up, but because I traded it, I studied it, I know it now. You're either going to fall in love with this game or you're not. And if you don't fall in love with it, I hate to break it to you, this is probably not going to be this place for you. This will not be the place for you. If you ain't going to fall in love with this thing, if you ain't going to take this thing seriously with your money on the line, this is probably time for you to exit stage left because it's a video game until you take profits. It's a video game until you take profits. And so when you look here, falling from 227 down here to about $75, remember the downtimes bring a lot of the opportunities that we praise today. The companies that we're praising at an all-time high today, saying, man, that thing's firing on all cylinders. Man, that thing just keep pushing. Remember, there was a pullback deep enough to kick you out of it, or there was a pullback deep enough to make you think you shouldn't invest in it. I remember vividly MU pulling back, right? And a lot of people worry, oh man, MU pulling back from 150 all the way down here to about what? $60. Think about the pullbacks. When you buy when there's a pullback, you never know what you're going to see on the other side. Now MU's a $400 company. Just let that sink in. So we talk a lot about fundamentals here, buying companies as they're falling, because we know that it's hard to time things perfectly. You see with Netflix, right? We wanted 55, 65 to be our perfect price. Some of us was able to pick up some in the 70s range a little bit, but we didn't go all in on it. We didn't put all of our money in that we probably wanted to. We were looking for 55 to 65. Obviously, the deal, that's outside of our control. Deal fell through. Paramount ended up stepping in and picking up Warner Brothers. So at the end of the day, Netflix is not going to be spending that paper. So guess what? The stock pops. That's what they want to hear. Okay, you ain't spending that. You ain't spending the money on this deal. Cool. We ready? Cool. Profits, more profits to investors. That was music to an investor's ear. That's why the stock popped. So taking all this information in, if you coming in consistently to class every week, listening, following on the information, we're going to discuss a lot of the same things over and over again to make sure you have it and it clicks in your head, right? But also playing back the Zooms to make sure that you're in the best position as possible, right? So you had this beginner A to Z channel that you can actually go ahead and grab. So you had a beginner A to Z channel here. Today's class and tonight's class will go directly right here for you. So we'll go ahead and post those. You can come back in tomorrow and the rest of the week. So we are going to have those classes during the middle of the day and in the evenings as well. So if you miss my memo, I'll keep you guys updated on these classes. But the goal of this program is for you to be a self-sufficient, independent trader, not take signals all day and waiting for somebody to tell you what to do 24/7. No, we're going to teach you how to fish for yourself, throw that fishing rod out there and reel your big boy back in. That's the goal effectively of this program, is for you to be disciplined and know exactly what's happening at all times. So it's not a guessing game. But the responsibility to show up attendance-wise is on the individual. You have all the access to recordings. We don't say that you got to come to every single class, but you got a plethora of recordings that you can catch in case you miss. So I would stress to you guys, utilize this information as best as possible. Everything that you need is inside the Discord in these tabs. It's right in front of you. All these recording tabs underneath information and resources. You missed the watch list, boom, you come back, you click it. You miss a class like tonight, you come back and click it. You missed the technical Zooms that we've done. You want to get your chart set up, come back and click these Zooms and read through them and watch them and get them all the way set up. If you missed this announcement, this is the schedule. You got Montgomery, Alabama, March 14th, Houston, Texas, March 25th. You got March 30th and 31st, New York City. You got DC, April 23rd and the 24th again. Those are the times and the dates for now. Well, those are the dates, the times, and all that other stuff will be given out. But that's it, guys. Real education, real time. This is what we're going to do. So we're going to make sure that you're good to go and you understand what's happening at all times. All right. So it's 8 o'clock here. I'm going to let you guys go for this evening. I appreciate everybody stepping into the building tonight. I'll see you guys tomorrow. And that is pretty much all I have. Thank you for your time. Y'all have a blessed one.